What's up guys, welcome to the UK housing market update for May 2022. If you're buying a house to live in, to invest in, if you're selling a house, it is vital guys, vital to know what the wider UK property market and economy is doing, because it's going to affect a lot of aspects of your purchase or your sell. Things like the price, when you should sell or buy, and so on and so forth. Whether you're buying your very first house or your 10th house, it's important to be informed and to know what is happening, what's going on in the market, so you can make the best decisions possible. So let's start with a quick summary. Right now, we are seeing record house prices. The average price of a UK house is the highest it's ever been in history since records began. Across the UK, the average price is £277,688. And of course, depending on where in the UK you are, the average is going to be either above or below that. We're also seeing the highest Bank of England base rate since 2009 and the highest inflation rate since 1991. So a 13-year and 32-year record respectively. And guys, we'll come on to why these three factors combined, highest property prices on record, highest interest rates and highest inflation rates, are really vital to know if you're buying or selling a house right now. So let's start with why interest rates are rising and how that's linked to inflation. A recent Forbes article explains that interest rates have exploded over the last 12 months from 1.5% in April 2021 to 9% in April 2022. This is the highest level that they've been for 30 years, as we said earlier. And as we can see here, the reason that's stated is to tame inflation. When inflation, which is at 9% currently, the highest since 1991, is rising beyond the control of the government, beyond the desired level, one of their key tools is to raise interest rates to combat that. And we can see that inflation has been rising due to uncertainty around energy price caps. You will most likely be aware of the spiraling cost of energy, your electricity, your gas, etc., and also uncertainty due to the Russian invasion of Ukraine. So what does the spiraling inflation and rising interest rates mean for us as individuals purchasing property or investing in property? So let's have a look at the general level of mortgages on the market. This is from the Forbes website. It's not every single lender, but it gives us a general idea. So we can see that the levels that we're talking about are, for a 2-year fixed, round about the 2.2% mark and upward, nothing below that. And when we have a look at a recent article by Mortgage Strategy, we can see that the average rate for 2-year fixes across the UK has recently risen by 9 basis points to 3.17%. For a 3-year fix, it's risen by 21 basis points to 3.26%. And then for 5 years and 10 years, they've risen to 3.3%. And sticking with Mortgage Strategy articles, we can see this at the product level of individual lenders. TSB have raised their 5-year fixed product by 0.25%, and Nationwide have raised the interest rates on their 2, 3, 5 and 10-year products by up to 0.25%. Now guys, you'll notice a theme across these articles that I've just shown you as it relates to rates. Fixed, we're talking about fixed rate products, and we're talking about rises in the costs of those fixed rate products. Why the emphasis on fixed rate products? Well, because we're in a current environment where interest rates are rising. So it doesn't make a lot of sense as somebody buying a house right now to purchase a mortgage on a variable rate, because you'll be paying a certain rate today. 2, 3, 4, 5 years from now, the likelihood is that the interest rate will rise in line with the Bank of England base rates, and you'll be paying more and more and more on your mortgage year to year. So fixed seems to be the flavor of the month right now. Me personally, I've just remortgaged on my own home here. I have locked into a 2-year fixed rate mortgage because I want to have certainty over what I'm going to be paying month to month over the next 2 years. Got a very good rate at 1.49%, so I'm very happy with that. It pays to have your credit in order, guys, because the better your credit, the lower the rates that you'll get, generally speaking. Now, linked to this, guys, especially for all of you first-time buyers out there, is affordability. It's all good talking about what rates are doing, what mortgages are doing, what's happening with products. can we actually afford these things as regular individuals on average wages? So I really like this data here, taken from the Bank of England. It's the averages for 90% loans, 90% LTV, 2-year fixed mortgages for first-time buyers. The average monthly mortgage payment in the UK, according to this data, is just under £900 per month, as you can see from the green line here. And you can see that there's been a particular hike since April 2020. I think that this was in line with when the global health pandemic, I won't say the C word, hit, and mortgage lenders started to withdraw products en masse, and they also started to up the price of their mortgage products because there was this perceived risk and uncertainty in the market. So you can see people now spending a lot more on their mortgage payments. So question to you guys, could you afford a £900 monthly mortgage payment? And interestingly, if we look at the yellow line, which is monthly rent as opposed to mortgage payments, rent and mortgage payments are around about the same price. The average rent in the UK and the average mortgage payment is around about the same price. So it makes sense, if you can afford it, of course, to buy a home and be paying a mortgage, because the equivalent payment for a rental property is basically the same. And now let's go to the big one, guys. This is really the key stat that I look for when it comes to people who are buying a house: affordability. Now, if you're a single person, and let's focus on this last line, the darkest one at the bottom, you're buying a house on your own, most mortgage lenders will lend you a maximum of 4.5 times your salary. So given the average salary for a single person, according to the stats in the UK, most people are only going to be able to afford a house at round about the 125,000 mark. Now let's jump a line up. The average asking price of a property right now in the UK is around about 200k. So immediately there is a big issue. There's a gulf in what prices are on the market versus what people, a person on their own, can afford. Now, if you happen to be buying with somebody else, you're more likely to afford it because you're adding two incomes together. And according to averages, when you add those two together, yellow line here, most people who are buying as a couple or as friends, whatever the situation is, you're able to afford round about £275,000 property. So what are we saying here? If you're on your own, there's no hope. Or you might just have to look somewhere that's a bit more affordable, guys. So in summary, a really interesting time to be buying property in the UK. We have rising interest rates, so it's a good time to lock in. This isn't financial advice, but according to the stats and according to what a lot of people are doing, locking in on a fixed rate mortgage seems to be the smart thing to do right now, especially as interest rates are likely to carry on rising because we're having especially high inflation. And then affordability, guys. Affordability is more of a long-term issue. I don't think that's going to change anytime soon. So let me know, guys, what you're planning to do. Is property unaffordable where you are right now? And what are you looking to do to get around that? Let me know in the comment section below. Subscribe, like for the algorithm, and I'll see you guys soon.